Good morning, Algo Trades investors. Just want to run over the recent price action in the market and recent trade that the system took and kind of get the big picture of where we stand in the grand scheme of things. Now, taking a look at here, this is the 30-minute chart. This is the AlgoTrade system. Obviously, the way it works are the green candles mean the bias, the trend is up. When they go orange, it means the market is giving mixed signals and really no short trade should be taken. When it goes red, we should see the trend is down and we should be looking for shorts. Now, recently we played a couple moves here. The trend was up, so the system buys into weakness. We had a big move down and we had a nice fade back up. So when you get a big gap against the overall trend, usually you see that gap get faded and generally it gets overcome and you see the trend continue. And we had a nice gain there, locking in around just over $1,000 per system trade being traded. Again, the trend remained up. We had a huge gap down, and we saw that gap get faded again, and we locked in another around $800, $850 there also. Now, the trend went neutral. We exited our position, and we saw the trend turn down. Now, yesterday, these bars were all red simply because the moving average was still trending down, so cycles and the moving average were down. And we ended up getting a short play. Of course, we had the trend is down, so we had the market gap against the trend. Usually we would see that gap get faded back down, and then most likely we could have seen it easily take off with the holiday rally. Instead, we saw the market really hold up here. And the last 2 hours really of the market, we saw a short covering squeeze, and of course it was enough to kick the market into an uptrend. Or not into an uptrend, but into a neutral territory that no trade should be taken. And of course, it came up and broke a previous pivot high over here, which is significant. And really, it's a time to get out of the play because it looks like the upward momentum has fully shifted to the upside. Now, this gap here was a high probability play. It was a big gap against the trend. The odds were it was going to fade back down, at least fill some of the gap. And even if it only filled some of the gap, it would have reached our first profit target, but it unfortunately didn't do that. It also gapped right up near the 20-day moving average, which is typically resistance, and it also came right up into this consolidation here, which is high. There was high volume here, and of course it was also this pivot low over here. So we had a high volume resistance, and we were expecting a pullback with the trend. Instead, the last hour of the session, we saw a short squeeze to the upside. Now, depending when you subscribe to the system, you're either still in the money, or if you're more recent getting on board, your account's been chopping sideways for several months as the system more or less kind of struggles here just to play the market and wait for it to do its thing and for the market to find a more tradable rhythm. Now, if we kind of look at the overall picture here, I want to kind of recap on how the system performs. Typically, it will match or underperform a market that is relatively strong and that has a lot of V-shaped recovery. So it's going to struggle during market times like this. And if you look this year, really this is from the beginning of the year of 2014 to now. We did start a little later, but overall you can see we had a V-shaped recovery here, and we had another little sell-off here that had a strong rebound. We had another V-shaped recovery, a huge V-shaped recovery in October that really never really led up until way up here. And now we've got another V-shaped recovery. And V-shaped recoveries are extremely difficult for really anyone to trade unless you're discretionary and you want to try and pick bottoms and try and pick tops. You have to allow for massive volatility for large drawdowns. You never know how far these pullbacks are going to go and how high they're really going to rally. So you have to have strict rules in place, and that's what the system does. We don't pick bottoms. We don't try and pick tops. We pick high probability plays that over the long run play out. But V-shaped sell-offs and recoveries are very tough to trade. And this price action is very similar to what we saw in 2009, other than it's completely reversed. 2009, we saw the big V-shape early, and then of course it had a whole bunch of minor V-shape throughout the year. This 2014 is a little bit reversed. We've had a couple early V-shape recoveries, V-shape patterns, and now we're starting to get the real big volatility and and V-shapes that are even tougher to trade. And it looks as though the market is slowly coming to an end. And January could be a very significant turning point in the equities market. And if we take a look at let me just pull up the 2009. Here's the 2009 chart. We're having very similar performance to this. We had this big kind of V-shaped recovery where price came down and rallied up. Again, we had another sharp V-shaped kind of recovery. I call these a runaway market. Really, there's no significant kind of pullback and chop in the market. We want to see a little more noise, a little more volatility in the market, not so much just one day after another grinding higher. If you don't get a sharp enough pullback within a trend, there isn't an opportunity to really get in, and the only way to trade these runaway markets is to just throw your money in and hope it sticks and the market keeps running. But it is a higher risk way to go. Now you can see here in 2009 we had a series of these kind of strong like pulses to the upside, these V-shaped kind of sell-off and recoveries, and very similar to what we're seeing for 2014, and it's just the flip. Instead of the V-shape being over here in 2009 with multiple smaller ones, 2014 we've got the opposite. We've got the big V-shape recoveries over here, and then we've got some minor ones over here. So this was the bear market bottom, and it looks as though where we are now, we're coming to a bull market top. And I've been talking about this for a while. Tops take months. They usually take anywhere from 6 to 12 months to unfold, and we're about 8 months into it right now. We're starting to see the big volatility with these big V-shaped patterns in the market. That's signs of weakness. There's big distribution going on. Small cap stocks are underperforming, and eventually we're going to I think see the trend here change, and it's going to really make a dramatic difference in how the system trades performance-wise. Now, if we take a quick look at the Algo Trades versus the S&P 500, here are the past years, 2007 all the way to 2014 to as of yesterday. You can see here what we're looking here in 2009. This is the type of price action we're struggling here with 2014. And the type of price action you can see here, we underperformed the SP 500 during this market condition. We only did about 11.4% return that year, where the SP 500 did about double that. Now, that being said, that's kind of where we are this year. And of course, this year has been a short year. We didn't start till March with investors coming on board, so we are kind of short on this year. And technically, for us to get a full year under the belt, we still have about 2.5 months left. So it'll be interesting to see where we close out for a year return overall. But you can see here the recent price action. We're underperforming just like what we saw in 2009. 2009 was a market bottom. I think 2014 is going to be more or less the market top. It'll happen in 2015, but that's where we kind of are at this point. So overall, we're still in line. Obviously, depending when you joined, you could be treading water, it could be underwater here for a while. But overall, the system's been doing exactly what it's supposed to do, and the system can be taking anywhere up to about $4,500 losses. We could potentially see a drawdown of up to $10,000, which is clearly explained through all our materials. Not that I anticipate that to happen, but we have to be aware it is possible. And when you hold the system for at least a year, then we're looking for some good average returns in the system. And so overall, it's just a matter of riding out these V-shaped recoveries, letting the market do its thing. Eventually, we're going to hit the sweet spot, and the market's going to start, our system will start picking up lots of gains, lots of trades, and we should start getting into years like these. So right now we're at these reversal years. 2007 was kind of a market top. 2009 was a market bottom. 2014, I think, is going to be another market top. They're very tough times to trade. You can see the performance for the SP 500 and the system very low, and that's because things become very chattery. You get these wild V-shaped patterns in the market that are very tough. You can't just short a market that's falling straight down. You can't just buy a market that goes straight up. That's not the way we trade it. We're not bottom pickers and top pickers. So we just have to let the market do its thing. And I think we're coming into 2015 should be a very exciting time. The next couple of years should be a very exciting time for the equities market as we get into some strong selling. And anyways, that's it. I just wanted to update, kind of explain how the system is, where we are at, and how it kind of compares to recent performance. Take care. Bye-bye.